estás engañando con falsas promesas que no valen nada. Hace mucho tiempo me estás engañando con falsas promesas que no valen nada.
Hi, everybody. Marshall Koval here, CEO of Lumina Gold. I've been part of the Lumina Group that Ross Beaty founded since 2004. Just kind of looking at the Lumina Group track record before we get into a presentation to look at Lumina Gold. Basically, over a period from about 2004 to today, the company has, or the group has raised 275 million in the market and returned about 1.6 billion to shareholders. We originally started in the copper space when Ross thought copper was 85 cents, would probably go to $2. He put together a group of projects, next generation copper porphyry projects, primarily in Canada, in Peru, Chile, and Argentina. I joined and I was the CEO of Northern Peru Copper, and basically have been involved in all of the group companies. We sold Northern Peru Copper for 455 million in 2007 to China Minmetals and Jiangxi Copper. It's interesting, our Regalito project is the Caserones mine today, which Lundin Mining just acquired in Chile recently. Fast forward to today, the group's been together for a long time, and after we exited the copper space, we moved into the gold space, and in 2014 we acquired the Cangrejos project in Lumina Gold, and subsequently from 2014 to about 2017 we acquired several other projects, the Condor project in Ecuador, Pegasus, Tarqui, Kimi, several other assets, Cascas, and all those were in Lumina Gold. And in 2016, we spun those out into Luminex. So today, the only asset in Lumina Gold is the Cangrejos project in southwest Ecuador. So why don't we go ahead and take a look at Lumina Gold here. So Lumina Gold, we're advancing the largest primary gold deposit in Ecuador, the Cangrejos project. Here's a forward-looking statement on some of the comments I'll be making. Basically, Cangrejos is the 26th largest gold asset globally by all classes, mines in production, development projects, resources. We finished a PFS this year, and we have a probable reserve of 11.6 million ounces of gold and 1.4 billion pounds of copper. And that reserve was within this indicated resource of 16.8 million ounces of gold and 2.2 billion pounds of copper. We have a large production profile, 371,000 ounces of gold a year and 41 million pounds of copper over a 26-year mine life. But if you look at it on a gold equivalent basis, it's 469,000 ounces of gold equivalent per year. And several years, it's well over 500,000, which kind of puts it into a tier one category. Long life, as I mentioned, 26-year mine life. Low AISC, $671 an ounce AISC net of byproduct credits, and the NPV at 5% using $1,650 gold and $375 copper was $2.2 billion in the PFS. And if you come closer to today's spot price, there's a lot of torque upside leverage to the metal price. So it's sort of a 3.5 billion NPV at $1,980 gold. We just recently announced a $300 million metal streaming deal with Wheaton Precious Metals. 6.6% of the payable gold production goes to Wheaton, but that provides $48 million for the feasibility study work ahead of us and some land acquisition, and it provides another $252 million for construction. The initial capital cost of the project is about $1 billion, so there's a about a 25% financing in place to advance the project to construction. Just looking at the shareholdership, basically 379 million shares issued and outstanding, fully diluted. 411 million shares, basically trading right now at about 190 million Canadian capex. That's about 150 million US, well below where we think we should be. I'll talk about that later. Ross Beaty's the largest shareholder. We have an Ecuadorian entrepreneurial group that has 18.1%. Management and the board have 9%. And Route 1, a diversified investment fund out of San Francisco, has 6.7% of the company. You can see our chart here over the last year. We've been moving up in share price the last several months from close to 52-week lows, but we're still below what we believe is a fair value for the company. Research coverage with Red Cloud, Haywood, and Raymond James. And, I think basically with the share price where it is today and what we've done to de-risk the project, it's a great investment opportunity for those people looking to enter. Right now, no equity financings considered going forward because of the Wheaton financing. So basically, have to go to the market to pick up some of the shares, but we're at a low price at this point. Just talk a little bit here about Ecuador, kind of where Ecuador has come. There's two major producing mines in Ecuador, Fruta del Norte, producing over 450,000 ounces of gold a year. Mirador, a copper gold porphyry, the production rate's about 60,000 tons per day. If you look over here, you can see that Fruta del Norte and Mirador have provided about 75% of the mining exports in Ecuador since 2018. There's small-scale mining in addition. But what's interesting is for exports, mining just passed bananas as the number 3 revenue for exports in Ecuador in March of this year. So petroleum's number 1, shrimp farming's number 2, mining's number 3, and bananas are number 4. And basically, you've got 3 projects ready to construct: Curipamba, La Plata, and Loma Larga. And then kind of the next tier of projects is Cascabel, Cangrejos, and our Condor project in Luminex. Just looking at Cangrejos and kind of the history of it and what the project has going for it, there's been over 100,000 meters of drilling. We're just in the field now starting our feasibility study drilling. Talk about that a bit more. But really what makes this project, it's a low-grade project. What really makes it potentially viable here and gives us the good economics is the infrastructure in the area. We've got power within about 17 kilometers of the site. We've got a port facility where Mirador is shipping their concentrates from 40 kilometers from our site. They're shipping 330 kilometers across the country to the port of Bolivar in Machala. We have paved highways within about 8 kilometers of the site, ample water, low elevation from an Andean perspective. The highest point on the property is 1,350 meters. No communities on the project. They're about 7 kilometers by road away. Very supportive communities at this point. We have a lot of employment. We have both long-term employment with the community and also during the drilling phase, we have quite a few community members helping move drill rigs, prepare drill pads. So we've got good relations as we speak with the communities. The most common questions we get with Cangrejos is, does this thing have scale? I mentioned 26th largest. It's the 13th largest undeveloped primary gold deposit by production capacity in the world right now. What about grade? If you look at this, it is a lower grade, 0.71 grams per ton gold equivalent over the project life. But if you flip it into copper equivalent basis, it's similar scale and size to Cobre de Panama, Mount Milligan, and Ruth Chris as far as grade goes. The other thing that's really important to the project that I want to point out is the low stripping ratio. It's 1.26 to 1. So you move 1.26 tons of waste for every ton of ore. It's a lot lower than the average gold deposits out there. Also cheap power in Ecuador, about 7 cents a kilowatt hour. I mentioned the infrastructure earlier and economies of scale. The project will go from 30,000 tons per day initially, and in year 4, it'll go to 60,000, and in year 70, we'll ramp it up to 80,000 tons per day. The capex initial capital is $925 million, excluding VAT, which is 12%, but you get that back when you're in production. So recent projects have been permitted and constructed in Ecuador sort of 2019 timeframe, Fruta and Mirador. And basically, the PFS that we have now, we're in discussions with the government on a term sheet for an investment protection agreement. We have an exploration investment protection agreement, and the exploitation investment protection agreement will allow us to get the permitting in place and ultimately get the mining license to operate. Just looking at Cangrejos, on the bottom right here, you've got the Cangrejos deposit. There's two deposits, Cangrejos, Gran Bestia. Mining would commence at Cangrejos and go through year 7, and then Gran Bestia would come in. I'm going to show you a cross-section through the two deposits. So on the right here is the Cangrejos deposit, and basically this is the resource pit shell, the darker one, and then the red one is the mine plan pit shell. So you can see in the Cangrejos situation, there's more high-grade mineralization below the current pit shell. So in a higher gold price environment, you could bring that into the project and extend the mine life. And then Gran Bestia on the left, the pit shell is on the bottom, and then the mine plan ultimate pit is on the red here. So anyway, there's you can see with Gran Bestia, very low stripping ratio. Basically, you're taking off the top of a mountain, and then you can see in Cangrejos mineralization comes right to the surface. So from a mining perspective, very low mining costs because of the strip ratio versus basically what you would take to the mill and what you would waste. So very favorable mining conditions. Basically, we've got reserves of 659 million tons here. The grade is 0.55 gold, life of mine 0.1 copper. So basically, that has a contained metals of 11.6 million ounces and 1.4 or thousand ounces. Sorry, 11.6 thousand ounces and 1.4 million pounds of copper. Metallurgy is really good. We get 85% recovery of gold, 79% of copper, 55% of silver. 7% of the gold reports to a doré through a CIL circuit, and the majority of the gold is in a copper gold concentrate. It's good grade, 22% gold, 120 grams per ton, or 22% copper, 121 grams per ton gold, and about 106 grams per ton copper. So no penalty metals, very saleable concentrate. And we've been in discussion with potential smelters, and we'll continue as we advance feasibility study to talk to those smelters. There's a lot going on this slide. I've talked about most of it. I think if we look at an IRR perspective, so at $1,650 gold and $3.75 copper, it's a 17% IRR. If you go up to the current spot price, it's a 23% IRR. We talked already about the NPV of the base case at $1,650 being $2.2 billion. And at 1980, it goes up to $3.5 billion. So let's talk a little bit about the Wheaton stream. We're really happy to have this. We're happy to have Wheaton as a partner, a great partner. So we have an early deposit of $48 million that'll take us through the feasibility study and hopefully through the land purchase we need to do. The upfront payment of $252 million will be received during construction. And Lumina, basically, we sell 6.6% of the payable gold production to Wheaton up until 700,000 ounces. And at which point the stream will go down to 4.4%. Basically, we get 18% of the spot price as a transfer payment and until 300 million is sold. And then it moves up to 22%. Also, if there's a change of control, if we're acquired by someone, then there's a 1/3 buyback. But the effects of the post-tax present value of the stream is sort of $190 million of NPV. So it lowers the NPV down to $2 billion. But it increases the IRR because basically the feasibility study is 5 years minus 5, and the the cash flow model starts at year -3. So the IRR goes up to 19%. This is just looking at the infrastructure layout. We've got the Cangrejos pit, Gran Bestia, waste rock storage, primary crusher, over to the process plant. And then off to the left here, we have a tailings facility. The tailings, we've gone with dry stack tailings. This really helps from an environmental perspective. We're recycling about 85% of the water. You're also stabilizing the outer margins of the facility and doing concurrent reclamation for stability. So from a risk of tailings failure, it's very low risk option. And we're seeing more and more of these dry stack tailings facilities being built. The technology for the filter plant and the filter presses have increased quite a bit in the last few years. So you're seeing the cost coming down of these type of facilities. So there's quite a few advantages environmentally, and also basically the primary one is recycle of 85% of the water. We've done a lot of ESG work. A majority of the electric power for the project is hydroelectric. That's a benefit to the project. The short transportation to the port, basically you have lower emissions impact compared to a project like Mirador that's hauling their concentrates to that same port all the way across the country. The dry stack tailings filtration plant recycles some substantial amount of water. Basically, you eliminate carbon emissions associated with the conventional tailings dam. No acid rock drainage conditions in either the waste rock or the tails. We're using aerial ore conveyors to minimize land clearance impacts. So it's a bit like a ski lift. So you have very low impact, just minor roads to do maintenance along it, doing the progressive reclamation of tailings and waste rock. And we've done a lot of reforestation work of previously impacted lands on the project stuff. There's a lot of grazing in the area historically, and we own a lot of the surface, and we've done quite a bit of reclamation for habitat restoration, biodiversity on those lands. And we have right now a robust social license to operate, and that's been built over exploration we started in 2014, but there was work going on in the late 1990s. So a well-known project in El Oro province, which means the gold province, no indigenous communities. So good relations with both the local community and the local governments. Basically, the timeline, we're in the process we completed the pre-feasibility study, working on the investment protection agreement. I just met with the ministries last week to further this. Our application is in to amend our exploration investment protection agreement to an exploitation agreement. We're in the process of the feasibility study. We're in the field now. We're starting that. We've got about a 9-month drilling program. We've got metallurgy, geotech, siting. We just brought in Ron Hallis as a COO. He's got a long operating history of mines and feasibility studies, sort of 35 years experience. So we'll bring the operating sort of preferences into the design of the feasibility study. And in parallel with that, we'll do an EIA and do the construction permitting. So that's about a 2-year timeline. Based on the PFS, we had about a 2.5-year build. So that's kind of the timeline for the project. And then this is a really unique project on scale on the global stage. If you look at the blue bars here, these are projects held by major or mid-tier producers. The gold ones are independent producers. And then here's how Cangrejos ranks. Basically, there's only 33 active gold development projects that can produce over 250,000 ounces of gold a year. Cangrejos is the 5th one, largest primary gold development project controlled by an independent. Again, these gold bars. I'm on the board of Equinox Gold, and we're currently building Greenstone right now. It's about 80% complete, but you can kind of see Cote's being built. So we're in the neighborhood of the project on production basis of several other projects that are being built. Now, I talked about the strip ratio, which is real important. I talked about the lower grade that we have. So if you look on a gold equivalent basis, you can see Cangrejos is at the bottom of these comparables companies as far as grade goes. But if you take the mine gold equivalent grade and divide it by the stripping ratio, we come up here pretty good near the top. And again, hard rock, greenstone, the Equinox is building. Basically, that's about a 4-to-1 to 5-to-1 stripping ratio, and you can kind of see the low strip ratio from a mining perspective. That's not the only aspect of cost, but it is an important aspect of the project. Now, here's where we think there's a value disconnect and a real investment opportunity. In 2017, since 2017, our first resource, we've quadrupled the resource. The gold price has gone up 68%. The copper price has gone up 37%, and our share price is only up 7%, including the financings we've done. So I think there's a great investment opportunity here. And as we continue to de-risk and move this towards production, basically we should see our share price move up. Hopefully the gold price environment holds up, and that should help us as well. A lot of focus has been on social responsibility, working with the local communities. We've done a lot with production, helping them prioritize their local purchasing. We purchase over $500,000 a year of local goods and services. We do a lot of programs with training local community members in anticipation of the project becoming a mine soon, working on operator skills, that sort of thing. And we've done a lot within the community to help with entrepreneurship programs to strengthen productivity of school orchards, poultry farming, a lot of skilled training that I mentioned, and trying to help the community become more sustainable in the long run. We've done a lot with well-being programs and also environmental programs. We've planted over 300,000 native species trees and properly owned. We've helped the community as well. So there's a lot of ongoing daily interaction beyond employment that helps with education, well-being, environment, and production chains. So in summary here, since we took over the project in 2014, we've consolidated a concession package that encompasses both pits. We've taken the project from no resource to the 26th largest gold resource in the world, completed 3 economic studies, and substantially de-risked the project. Our 2023 PFS demonstrates the massive value the project has. Adjusted project phasing to offset inflationary costs of initial capital. In the previous PEA, we went from 40,000 ton per day to 80 as far as the expansion goes. Now we're going from 30 to 60 to 80. And that helped us keep the initial capital flat around $1 billion. We converted 11.6 million ounces of gold and 1.4 billion pounds of copper to a probable mineral reserves. And we have provided a 26-year mine life that has a 2.2 billion NPV. If you take the Wheaton financing in there, it's a 2.2 billion NPV. And the team has a track record of successful monetizing large-scale assets. We sold 8 companies for a cumulative 1.6 billion over the group's history. So with that, I appreciate your time and interest, and thanks for listening in.
Thank you, Marshall, for the excellent presentation. We will now start the Q&A session, which will be divided into 3 pillars. First, we'll talk about Ross Beaty, Marshall's track record, and other key shareholders of Lumina Gold. Then we'll, together with Marshall and COO Ron Hallas, deep dive into the Cangrejos project, talking about potential changes in the upcoming feasibility study, recovery rates, the expansion phases, permitting, local community relations, etc. Then we'll proceed to the final pillar, discussing how Lumina will deploy its capital and its exit strategy. But let us begin talking about the key people and shareholders of Lumina Gold. Marshall, you're a geologist by education and you have extensive experience working in the mining industry for several decades. Could you tell us a little bit more about your career and how you came to start working with the Ross Beaty Group?
Yeah, so I got a bachelor's degree in geology from what used to be the old Missouri School of Mines. Today it's Missouri University of Science and Technology. But it was a mining school that was started in about 1867 in the Lead Belt area in Missouri. And it's been one of the primary mining schools in the U.S., along with Colorado School of Mines, Nevada School of Mines, Montana School of Mines. So really good, solid mining education there. So at the end of 1978, when I graduated, I entered into the mining industry, and I've worked, I'm on 44 years in the industry. The early part of my career was as an exploration geologist, and it's kind of interesting. Inspiration Consolidated Copper, which is Freeport today, was a company that I started with. And what Inspiration would do with their geologists is we had the Globe Miami mines in production, large porphyry copper mines, and they would put us into the pit to do grade control, to understand what it took from an exploration perspective to discover a gold deposit. So that skill set helped me quite a long time. So as an explorationist, I worked for Utah International, BHP, Meridian Minerals, Inspiration Consolidated Copper, which is Freeport, and Inco. And then I went into sort of the consulting business, a geotech consulting business with Golder Associates. And Golder was one of the preeminent companies in the world in rock mechanics and geotechnical engineering. Even had some offices in Uppsala in Sweden and a couple other areas. So I learned quite a bit from Golder in that aspect of mining. I was as one of their senior guys in the mining group. And then after that, I left Golder and went to a company, Pincock Allen and Holt. I actually put an acquisition together, and we acquired Pincock Allen and Holt, and I ran that from sort of 1993, 94 in that time frame through 2002. And we're the independent engineer for banks on large project finance, M&A. And basically kind of what came out of that at the time, we worked on Batu Hijau, Antamina, Los Pelambres, Southern Peru Copper, a lot of these major deposits or mines at the time that were being financed. And we were the bank's independent engineer. And so before they would release money, we would give the heads up. And, at the time, those were sort of $2 billion initial capital projects. Today, those projects would be $8 to $10 billion. This was back in the early mid 90s. So I gained a lot of experience on the finance side. And basically in 2002, went out on my own and was consulting, primarily helping junior mining companies get financing and advance their projects, feasibility, and that sort of thing. And was involved as the owner's rep for Minera Andes at that time. And Hochschild's Minera Andes had a joint venture. We built the San Jose gold mine in Argentina. So that was, I was doing that, and then got recruited by Ross to run Northern Peru Copper, which we sold to China Metals and Jiangxi Copper, and a very large porphyry copper deposit near Yanacocha and Michiquillay in Northern Peru. And basically, I ran that for the Chinese for about 9 months, and then continued on with Ross. So I joined Ross in 2004 through all the Lumina companies that I showed earlier here, and then also on the board of Equinox Gold. And then we also had our private equity company for about 5 years, where the biggest investment we had was in Ventana Gold, which is the La Moscata La Bodega project in Colombia. And that was sold to Ike Batista at the time for $1.6 billion, sort of in 2010, 2012 timeframe, somewhere in there. And we had owned about 16% of that. So that was a real good one. So now in 2014, Lumina Gold got started. I've run that, and Luminex, and then also sit on the board of Equinox. So that's kind of the background. A little bit long, but 40 some years.
Since you spun out Luminex Resources, it's more or less, it's a mirror management, and you're the CEO of two mining development companies, both located in Ecuador, but still two separate companies. How do you distribute your focus between Lumina Gold and Luminex Resources?
Yeah, so during the PFS, the later stages of the PFS, I was probably on Cangrejos. I was probably about 70% of my time on that pre-feasibility study. I'm pretty hands-on with that with my technical background, engineering and geology background. So I tend to lead the team and pretty involved in that. So over the last, say, 6 months before that PFS was completed, that was about 70% of my time. Then it shifted where I was back more on, right now it's sort of 50-50%, maybe a hair more on Luminex. We've got a drilling program going. We're getting some really great results from this Cuyas West high-grade underground deposit. But now that we're back on the feasibility study, one of the things that I did to make sure that I could effectively be involved in management of both was to hire a COO, Ron Hallis. And, we've got a really good management team. We've all worked together on the whole series of Lumina projects. A lot of guys have been with us plus 10 years, 15 years. So it's pretty seamless. I mean, we're able to deal with both of these. Got quite a few vice presidents that have been with the group for a long time. Leo Hathaway, our senior geologist of the group, he's senior VP in Lumina Gold. He kind of heads up a lot of the field work. And then we've got our chief geologist, Andy Karstensen, who is basically involved in the field aspects of executing the work. So, we've got a really good group of people. John Ewell, who's our corporate government affairs social. We've got Glenn Mills with a lot of experience in environmental. He's a cyanide code auditor, and he's worked all over the world. Scott Hicks has been a great addition. He's actually probably been with us 6 years now, and he's kind of the new guy other than Ron. But we've got a really solid management team. Lyle Broughton, our corporate counsel, is great. He's helped us with this. And then one of the most important guys in the group is Diego Benalcázar, our country manager. And, we've worked with Diego since 2014 in Ecuador. So he's an Ecuadorian, well-known geologist. And, we've got a really good, solid management team that can handle these two companies.
It shines through that you really know the management or the management team members in and out.
One thing I would like to add there, Jasper, is, even beyond the management team, the guys that I mentioned by name, we've probably got 20 geologists within the group that are split between the two projects that are Ecuadorian, South American geologists, people that actually make the things happen on the ground day to day. So we've got, we've got a really solid team between the two companies, and that's why we've been able to execute so well.
But by the way, speaking of spinning out Luminex Resource, I guess the rationale was that you would get more value on having the company separate. But were there any other reasons for that?
So I think basically what we did, and this goes back to the Lumina Copper sort of business plan and the way that we structured Lumina Copper. We spun out all these series of companies in Lumina Copper as projects got closer to development. So basically what we did is Cangrejos was on the development path, starting to get pretty advanced. So we spun everything out into Luminex. And basically in the past, with the Lumina Copper model, we've advanced de-risked these projects. We've taken them far on the development path, and then somebody has taken us out. So that has been the business strategy. And that's still one of the things that we're considering with Lumina Gold. So basically it gives you a clean one asset company, that's in good shape from a corporate perspective. And if there's a potential transaction, it's a pretty clean deal. So that was what we did. And now, by the same token, in Luminex, we have the Condor project, which we did a PEA. We made a new discovery on this Cuyas West high-grade underground deposit. Now we're looking at eventually getting that an updated PEA next year sometime. We're working on a new resource for it. And then that could be put in the scenario where we spin the other assets out. And that's just been the structure of how Ross and management have put the companies together through the years.
Speaking of Ross, so Ross owns 21% of the company, but he's not a board member So
No,
how active is he in sort of the decision making of Lumina?
he's active. He's at all the board meetings, and when I'm working through things with management and we need Ross's input, he's always available. He's a real strategic thinker. He's good at very good entrepreneur, and he's a quick study. So like I can talk to him. I can go a month without talking to him, bring him up to speed on things. He has good questions, and he knows what's going on. So he's active.
Your second largest shareholder is the Ecuadorian entrepreneurial group, 18% ownership, almost as large as Ross. Could you tell us a little bit more about your second largest shareholder, and are they also active in decision making, or they're more passive owner?
It's kind of interesting. The group has about 6 primary members, and we acquired the Condor project from them. They had the project, and at the time, all of that was in Lumina Gold before we spun out Luminex. But they've been a really good supporter. They've been a pro rata sort of investor in both Luminex and Lumina every time we've gone to the equity market and finance. And I just met with them, several group members last week in Ecuador, and really they're interested investors. They help however they can. They're not actively involved in management of the company, but we talk to them regularly. And they're an interesting group because they're involved in pretty much all aspects between them of Ecuadorian business, and they're apolitical. So it doesn't matter who's in office. They have the ability, as one of the larger investment groups in the company, even though they're individuals with different companies, they have the ability to help us. Matter of fact, I met the current president Lasso through them in a meeting in New York that they arranged. So they're a valuable partner, just not only from an investment perspective, but they understand the business and political climate in Ecuador. So we get advice from them pretty regularly on that. So they've been a great partner.
Sounds like a great cornerstone shareholder to have.
100%.
We'll now move on to the second pillar of Lumina's investment case and dive deep into the Cangrejos project. We will, among others, discuss what changes COO Ron Hallas is looking to do in the feasibility study. We will discuss recovery rates, tailings facility, expansion phases, permitting, and more. Ron, you joined Lumina's Chief Operating Officer just a couple of 2 weeks ago. Could you tell us a little bit about yourself and your career and how you came to join Lumina?
Certainly, Jasper, and thanks for the opportunity to speak today. Yes, my name is Ron Howells. I'm Chief Operating Officer of Lumina Gold. It's only been 2 weeks since I've been employed by them. I am a mining engineer by education. I graduated from McGill University in mining engineering. I also have a graduate diploma in business administration from Simon Fraser University in Vancouver. I have about 35 years of experience, both underground and open pit, mine site experience, corporate experience, feasibility work, corporate development, etc. So I'm quite excited with this project because it brings together my South American experience. It brings together my mines operations experience from PT Freeport, plus Kinross Tassius, where I was operations director, for example. Brings together my corporate development work from training at Placer Dome and other major mining companies.
Have you ever been involved or responsible for the development of an open pit gold mine of a similar size?
I have worked at open pit gold mines of a larger size or about a similar size. For example, I was operations director at the Kinross Tassiest operation in Mauritania, where in that case we were moving over 200,000 tons a day of ore plus waste. So the mill is a bit smaller at Tassiest, but the size of the open pit was the same where I was the operations director.
Could you, in your own words, for the viewers, describe the Cangrejos operation?
Oh, the Cangrejos deposit, I would say, is world class. If you look at the reserve, it has a reserve of almost 12 million ounces right now. We're going to continue drilling. To have a property like this with a mine life of 26 years that can produce in the area of 500,000 ounces of gold equivalent per year for the life of the mine, it's an incredible deposit. So lots of opportunities here for the country of Ecuador, for employment, and for Lumina Gold shareholders to take advantage of the property.
Could you also describe a little bit about the operation, what flow sheet you will use, what the tonnage will look like, and how you'll face it, and etc.?
Certainly. So the preliminary feasibility study, which was issued in April this year, it's available on our website and CDAR. It shows a process plant that starts off at a rate of 30,000 tons per day processed for the first 3 years of operation. After that, there's an increase to the production from 30 to 60,000 tons a day, and a few years later, an increase up to 80,000 tons per day, processed through the process plant. It's a pretty much a standard flow sheet using a lot of the current technologies and newer technologies. So there's a primary crusher, there's high pressure grinding rolls, or HPGR, to make the material even finer, followed by SAG mill. It's a flotation process, and there will be 2 different products that will be leaving the site. One is gold doré bars containing the gold and silver, and the other is what we call a copper concentrate, or a concentrate that contains some of the copper and some of the gold.
Almost all of the gold will be, or mostly will be, recovered from the copper concentrates. But despite that, you have very high payability, sort of 98.2% for weighted average for the gold. Why is that, or why are you still succeeding in having such a high payability despite having most from copper concentrates?
The preliminary feasibility study had some marketing studies done. We will have to wait and have a final contract at the time of actual gold production. It's just a question of the market. The world wants gold these days, so there are attractive opportunities to sell gold throughout the world these days.
What changes do you think that you would like to make to the feasibility study or to the operation?
Thank you, Jasper. The project has many advantages, including proximity to the Pan American Highway, proximity to relatively cheap hydropower. So with a cost of electric power that comes from hydro dams, we're looking at, I believe it's 6.8 cents per kilowatt hour, which is very attractive. So one of the focuses that I have right now is to look at how much electrification we can do, given that it will be, we'll say, green because it's from hydropower, as well as what can we do to reduce costs. So there's a possibility we may look at trolley assist electric trucks inside the pit. So we would reduce carbon emissions by replacing, say, diesel trucks with electric trolley assist trucks in the open pit. That's just one of the ideas, as well as looking through the process plant flow sheet, what other parts can be optimized based on test work that we still need to perform.
What is the capacity of the dry stack tailings facility, and could it be expanded in case of an extended mine life?
So currently, we have a reserve of about 660 million tons of ore in the pit. All of that, after processing, will be going to our proposed dry stack tailings storage facility. The area is relatively flat where that facility will be installed, so we do have capacity to increase the size of that, assuming the reserve increases with time. Given the fact that both the Cangrejos and Gran Bestia pits still do have mineralization at the pit bottom, depending on where the metal prices go in the next 20, 30 years or so, there's a very good likelihood of expanding beyond our current 26-year mine life.
By the way, in terms of drilling planned for this year, could you detail the viewers of the drilling program, and if there would be any expansion drilling or just conversion drilling?
So at this point, as I said, we have a 26-year mine life. So expansion isn't our priority right now. In the pre-feasibility study, 100% of the mining reserve is in the probable category. So the plan is to do infill drilling at the site to increase the confidence from proven to probable mineral reserves, so we have greater certainty of payback of any financing that's done to build the project. So we do have plans to do, as I said, infill drilling, plus drilling for geotechnical research, as well as more metallurgical sampling to fine-tune the process plant flow sheet.
You mentioned the payback, and the payback is 5 years due to the fact that you are facing it. And that is relatively long. Do you think that could be a potential problem for any future financing in case that you actually would go out and build it?
I don't believe so. The preliminary feasibility study was done with a relatively conservative gold price, I believe, of $1,650 per ounce. So given the fact that today, the gold price is about $300 higher than that, I believe that there's very good opportunity for quicker payback. But the feasibility study was done professionally using that $1,650 gold price.
The strip ratio for Cangrejos is exceptionally low, 1.626. Could you give some color? Why is that?
So I am a mining engineer. I'm not a geologist. I can't speak to the exact distribution of copper and gold in the ground, but it is. We are quite fortunate that the strip ratio is very low compared to industry standards. At as you said, a 1.26 overall strip ratio. So that will help with our cost structure, and that's one of the key drivers to getting us to a all-in sustaining cost of only $671 per ounce over the life of the mine.
So in the pre-feasibility study, if you look at the mine sequence, and you will sourcing a very small portion of ore from Gran Bestia from day one or from year one, although it has lower grades. What is sort of the rationale behind even sourcing or mining it in the first couple of years, given that there is a difference between the grades between the Gran Bestia and Cangrejos deposit?
You are correct in that the Gran Bestia overall grade is lower than the Cangrejos grade. The mine sequencing that was done during the feasibility study shows a total of 7 phases of mining, 4 phases in Cangrejos and 3 in Gran Bestia. And for the first several years, the first 3 phases focus only on Cangrejos. So it's a well done mine plan with a declining revenue or an increase in cutoff grade strategy. So we are bringing in slightly higher material in the first 3 years, again, which helps with payback. So Gran Bestia is only the first ore coming out of Gran Bestia is what we call phase 4 of the project. So it's not right away, but after we're well into paying off our financing.
The total gold recovery is 85%. Do you see any improvement in that without increasing the initial capital cost in a considerable way?
There will be testing done over the coming months to look at that. That is on our list of things to do. It is possible to increase that. Maybe it's a increased cyanidation. Maybe it's gravity recovery. Gravity recovery has the advantage of less chemicals, and the more gold we can get sooner through gravity and not have to wait for it to be paid in a concentrate shipment down the road. So that will be the focus of some of the work going on in the next 12 months.
Could you in detail explain the work program for the coming 12 months in terms of drilling, studies, etc.?
Certainly. So we do. I was at site last week. Like I said, I saw the crews preparing drill pads. We're getting ready to kick off the drilling campaign. There will be a total of, I believe, 10 drill rigs on site. So it's something we're trying to speed up as quickly as possible by using a lot of drilling assets. The drilling will be done, as I said, to increase the confidence in the resource classification from probable to proven reserves. Drilling will also be done for metallurgical test work. Samples will be sent to North America for testing in labs there on hardness, etc., abrasivity. as well as geotechnical drilling to make sure we have the right pit slope angles based on the rock conditions. Samples will be sent to Canada for testing. Once many of these samples have been done, the metallurgical test work will continue in South America using the same laboratory in Lima, which I visited again last week on my trip. So we're ticking all the right boxes, checking for grade, checking the geotechnical work, checking the metallurgical work. We will get a new mine plan with the new drilling, so maybe there'll be some increases in grade, maybe there'll be some slight changes in slopes, etc., depending on our research. So lots to do to get from where we are to the completion of a feasibility study.
Probably difficult to say now, but do you think that the pit shell could be larger or deeper than the PFS due to additional drilling, perhaps?
It is possible because if you look at our corporate presentation, you could see that many of the holes drilled in the current pit shell, the holes end in mineralization beyond the last phases of the mine operation. So there is a good likelihood of that. Again, it depends on what gold and copper price we use, if there's any changes in the cost structure that we see. All those can be factors in changing the exact amount that becomes a mining reserve for us. Hard to predict with certainty today, but there's certainly potential there to increase.
And to follow up on that question, this is of course very, very long out, but what potential do you see for turning this into an underground operation after 20 years of production or something like that?
It is quite possible. As I said, we do see mineralization at depth. If you look at many of the largest deposits in the world, for example, I worked at PT Freeport, Indonesia, where the Grasberg open pit was very large. It ran for a long time, and now they're mining the rest of the ore body from underground. So there are many cases of, with time, open pits becoming underground mines. It's too soon to say at this point. We're focused on the first 26 years of the mine life as it stands now, but certainly potential exists.
Regarding risk, where do you see the most risk with a project? And now I'm talking only strictly operational, metallurgy, environmental, research is great, not reconciling, etc.
To be honest, the quality of the work that's been done so far is excellent. I haven't identified any risk areas myself so far that keep me up at night. So if I think of something, I'll let you know. But right now, I can't really think of any risks that are in front of us right now.
I mean, you're facing it in three phases. I've already talked about to Marshall about the rationale, that you can get more potential buyers for the project. But are there any other advantages of facing it in the development in three phases that besides that?
It's an economic decision to a large degree. As it stands right now, our initial capital cost is around 925 million US dollars, I believe. So Marshall and the Lumina team have done a great job in securing the $300 million Wheaton financing. We still need other financing to be arranged as we go to get to that 925 million. That will have some challenges, but it's easier to go for that financing rather than financing the larger mill of 60 or 80,000 tons a day from day one. So it allows a quicker payback to use this phased approach for mill expansion.
It's sparsely populated in the vicinity of Cangrejos, but how are the relations with the local community, and what's the overall attitude towards mining in the province of El Oro?
So it's kind of interesting. The province that we're in is El Oro province, and translating from Spanish to English, it means the gold province. So there's been a history of mining in the area. Mining continues, primarily smaller scale mining, and there's a fair amount of exploration. So it's a mining area. There's not indigenous communities in the area. It's mainly agriculture. Further away, sort of near the port facility in Machala, there's shrimp farms. There's banana plantations, but generally further away. We're up in the hills where there isn't a lot of productive land up there. There's some cacao in the area, but most of the land in the project area is all grazing or timberland. And as far as the communities go, the closest community is Valle Hermoso, beautiful valley. And basically, we have a lot of employment. We have a lot of social programs that I kind of covered at a high level in the presentation. And we employ a lot of people, both during the drilling program. We use a lot of local labor for drill pad, moving the drill rigs, clearing roads and trails. And so we also make it mandatory that our drilling contractors hire local labor as well. So, if you look at a lot of these communities, the first thing they're looking for out of a project is, transparency, communicate fairly and transparently, employment thereafter, and then assistance with social programs, environmental stuff, different things like that, community development. So we have active programs going in all those areas. And then we also have local employees that are permanent staff members up in the project area. We use contractors as much as we can. We try to source as much vegetables, produce, whatever we need from the area, services. We're working on, a training program where we train operators on heavy equipment from the community members, anticipating that in the future we'll need operators for the project. And so I would say, our relations overall with the broader community are really good. You can never take that for granted. We've helped them. We've built large greenhouses. We've helped them, in the schools. We've done a lot of that sort of thing, and you just have to continue to do it. And it's not like you're Santa Claus giving them things. I mean, it's you get a good working relationship that benefits both sides, and so I think that's been a cornerstone to our ability to work in the area since we got there in 2014, basically uninterrupted. We've been able to carry out projects and work with the communities.
Are there any indigenous groups living in the process of El Oro?
No, it's one of the few provinces in the country that doesn't have indigenous communities. That doesn't mean there's not indigenous individuals in the area, but you're not dealing with indigenous communities.
The next milestone for Lumina Gold is to get the investment protection agreement for the exploitation of Cangrejos with Ecuadorian government. And how far advanced are the discussions?
Yeah. Basically, so we were the first in the country. So there's no bilateral trade agreement between Ecuador and Canada. So the way that the Ecuadorian government has worked was these investment protections agreements, not just mining, in all foreign investment businesses, you have the ability to do that. We're the very first in Ecuador to get one for an exploration investment protection agreement. So what we're doing is we're amending that agreement. And the way it works is we'll negotiate basically a term sheet with the government that has royalty rates, import duties, tax rates, all those sort of things. And then once we get the environmental impact assessment complete, we do the public consultation and we get the environmental license and a water license. Then we sign the final exploitation investment protection agreement with the government under the term sheet that you've negotiated prior. We'll be able to use those terms in the feasibility study. So once you have the water and the environmental license, you have your terms negotiated. You basically you apply, you sign the investment protection agreement, and then you get your operating license. That's kind of the major permit framework that you have to do. And then that operating license is for 25 years, and it's renewable for an additional 25 years.
And one thing that Sol Gold sort of proved yesterday was that the interim government or Lasso's government is still fully functional.
Oh yeah, it's fully functional. Yeah, I mean, I've met Lasso 3 times, and he's a businessman. He's not your normal type of politician, but he really wants to do good things for the country. Obviously, he right at the moment he dissolved Congress, so he's both the executive and the legislative branch, and he has to get anything he does in a major legislative way through the Constitutional Court. But as far as the ministries functioning, they're still functioning, and they want to get as much done as they can between now and when their term's up, likely November. So we hope to have the term sheet for the investment protection agreement agreed to and signed before they leave office. But anyway, our applications in and comments are going back and forth, so the process is ongoing.
Then I saw royalty rate that you will have on Cangrejos. Is that also negotiated and included in the
It's included.
IPA?
Yeah.
Do you have any expectations of what royalty that you will be able to get?
So one of the things that we were involved in previous administrations, Cangrejos it's a lower grade, it's a large scale, it's a productivity exercise type of mining project, right? It's akin to a major porphyry copper mine. So productivity and low cost and all that is really critical. So things like royalties and taxes have a very significant part of the project and have the ability to impact a project. So we went to it was during the Correa government, and at the time the royalty rate was 5% to 8%, and that was negotiated in an investment protection agreement. We showed that government that, listen, a project like Cangrejos can't take a 5% royalty like something like Fruta del Norte, which is a very high grade, low cost mine with high production. So we negotiated with the government, and they actually lowered the royalty rate down to 3%. So what we hope to be able to do is, lock in a low rate like the 3%. And, the other thing that the investment protection agreement does is major capital items for import duties. You provide a list of all major mechanical and electrical equipment, and part of the IPA is to get relief from import duties on those equipments. Also sets the tax rate, also sets, there was a 5% repatriation of capital tax. It eliminates that. And so those are kind of a lot of the pieces that go into the IPA.
Great, yeah, and getting that corporate tax rate reduced from 25% to 20% would also be quite a meaningful.
Yeah, that's meaningful for sure.
By the way, of course, there has been quite a lot. It doesn't really hurt your share price too much, but the turbulence in Ecuador or on the politician side. What are your expectations for the upcoming election, and how do you think it could impact the permitting timelines?
I think so. One of the things that that's been pretty critical that Lasso was able to do is the under the environmental impact assessment that you have to do, and the consultation, public consultation. He was able to put regulations in place for public consultation, and that was missing earlier. We've done public consultation with our exploration EIA that we have to do exploration work at Cangrejos. So basically, you've got Loma Larga, you got Curipamba, and La Plata. La Plata and Curipamba are right in the public consultation process right now, and it's one of the final things they need to do, get the approval of the environmental license. So that regulation was put into place by Lasso, and it's starting to be adhered to and used. So that took a little bit of the log jam away because there was uncertainty on what public consultation would have to happen, or so that's helped out. So That's happening as we speak on both Loma Larga and at Curipamba, or not Loma Larga, sorry, at La Plata and Curipamba. So that's helped. That's one good thing Lasso did there.
The environmental social impact assessment, the ESIA, or sort of it's divided into two parts: the technical part and it's the social part with the consultation rounds and etc. But when will you start advancing the ESIA process?
We're doing it now. I mean, so basically, kind of the key component of it is to, and part of the work we're reviewing the PFS is you lock down the facility locations, and then you can make sure you have, all the baseline monitoring work you need, et cetera. And then you do an impact assessment and, look at mitigation plans related to it. And we've done a lot of that. We've done all the baseline stuff. Like, for instance, we're actually early on things like biodiversity studies. So we're just finishing up a biodiversity study now in the dry season. And we've done a wet season and dry season biodiversity study last year. Last year. So basically, we're doing all of the baseline environmental monitoring, the water, all the different things, flora, fauna, that sort of thing. We use outside consultants. We're doing the same on the social side, where we use the social capital group to do, look at basically all aspects of the social stakeholder mapping, all that kind of stuff, and do a baseline social assessment of the area, socioeconomics, the whole thing. So we're doing all that, kind of as we speak. So as we get into the feasibility study in parallel with it, we're doing make sure we have all the baseline, do the impact analysis, do the mitigation measures, everything you would need, plan of operations to support the ESIA.
We have now arrived at the third pillar of Lumina's investment case, its capital deployment and exit strategy. We will discuss how Lumina will deploy its capital that it's received from Wheaton, and we will discuss the Wheaton stream, and then we will also discuss how Lumina plans to exit the Cangrejos project. Before we move on to the Wheaton stream, how much of the amended second standby loan or the credit line from Ross Beaty has been used?
We used all of the credit line, and it's a convertible, so we expect him before the year's out, before 2023, to convert. So that would probably take him up to close to 25% ownership of Lumina Gold.
You have drawn 12 million from the early deposit from Wheaton. How are you intending to deploy that capital?
So basically, in 6 months, if I recall right, we get 10 million more, and then we get at 1 year, we get the full 48 million at the end of the year from when the deal was signed. But basically, that's primarily for the feasibility study work, and we're in the field now, starting drilling actually this weekend with a lot of the geotech drilling for pit slope work. And then we're doing an infill drilling program to take the resource from the indicated category for the first 3 years of the mine life, which is basically payback, or more or less payback. And so we've got a 23,000 meter drill program there. It'll start at the Cangrejos pit. Then we have to go into both Gran Bestia and Cangrejos to do some drilling for metallurgical sampling. So the metallurgical program. And so we're doing the infill drilling program for the first 3 years at Cangrejos. We're doing the geotech high wall program. That's about 19 holes, about 50-50 between Cangrejos and Gran Bestia. And then we're doing probably 6 or 8, maybe 10 holes for additional metallurgical testing of large diameter core. So that's the field aspect of what's going on. At the same time, we're going back and looking at all the recommendations. So this is how the money's going to be spent, the 12 million we have right now. We're going back and looking at all the recommendations from the PFS consultants and the opportunities, and we're starting to scope the engineering portion of the feasibility study and make sure what we identify with the engineering, that we have all the field work planned to support that engineering, metallurgy, a new mine plan, new pit slopes, all that kind of stuff. So that's kind of where it's headed. And then there's a standby facility of the 48 million. It's 11 million of the 48 is for land acquisition. So basically, we've got most of the land we need for the project, but we'll have to pick up additional pieces here and there.
The figure that was quoted from the pre-feasibility study was that it would probably take 26.5 million to get to a feasibility study. Do you think that's accurate, or do you see more sort of additional work that wasn't mentioned in the PFS, or perhaps more drilling that would increase?
I think it's a pretty good estimate. So we've got meetings next week with all of the PFS consultants to go through all this stuff to get Ron up to speed. And, Ron was in the field with me last week. And we're going to, revise the budget and all that. But I think we're in pretty good shape with that 26 million. It should be plus or minus, but it won't be substantially higher than that, we believe. And then, the other part of that is to run the corporation, both in Canada and in Ecuador, G&A, that sort of thing. But, I think we're going to be in pretty good shape.
You released the PFS a couple of months ago. In that, the big difference compared to the PIA is that there will be 3 phases instead of 2 development phases, in order, as you said, to maintain the initial capex on the same amount at the 925 million level. But you're building it to sell it, not to operate it. So why phase it if you're not going to develop it? Because I guess the MPV would be a little bit higher if they had fewer phases.
Listen, if you weren't capital constrained, you would probably go somewhere, and we did trade-off studies. You get a little bit higher NPV IRR to go to maybe 50,000 tons a day and then expand to 100. But, we're basically looking at a broader potential group of acquirers if we decide to sell the project and not build it. So basically, we knew we were in a high inflationary environment, and we captured inflation because the estimates we had, major equipment packages that went out for budgetary quotes at last quarter of last year. So we captured inflation in a lot of that. We had mechanical equipment packages, electrical equipment packages, mining fleet packages go out for quotation. So the idea is that, we're in an ever consolidating gold mining space, particularly if you look at, the recent Newmont-Newcrest deal. So there's fewer majors out there, right? So what we tried to do with the phasing is, if there is a takeout, and that's been part of the whole Lumina Group strategy over the years, that you have a broader audience of companies that could potentially take on a project like this. For instance, Equinox Gold, we're a mid-tier company, with a sort of a production profile around 600,000 ounces a year. We're building the Greenstone project in Canada right now, which is a $1.25 billion Canadian build. It's 28,000 ton per day throughput in the mill. And, Equinox is not saying Equinox is going to take on Cangrejos, but Equinox is the size company that could build a project like this. And there's other mid-tiers that could do it. So you just have a broader audience. You obviously have potential Chinese companies out there as well. You look at the Continental Gold deal that was done in Colombia not too long ago. So that there's a broader potential group of acquirers that could take it on. So if you go back to your question about why did we phase it the way we did, if you were going to go the PEA 40,000 to 80,000 tons per day, you're probably up around 1.2, 1.3 billion initial capital is what you're looking at there. So you have fewer potential companies that could acquire it, but also we wanted to capture inflation so that we had that and inflation's come over the top now. So we have, the initial capital that at pre-feasibility level that sort of takes that into account. So that was part of the logic behind it. And, there's always operator preference issues, right? So if I'm a big company and I'm not capital constrained, I'm going to approach it probably different than we approached it. But we're at the point now with the project where we get all of the drilling done, a lot of the field work de-risked, an acquirer, say it's a major or a highly financed mid-tier, they could rearrange, the project throughput, all that sort of stuff to their preference. So there's a lot of operator preference, but we're just trying to broaden the market. And then from a capital markets perspective, juniors with $1.5 billion sort of initial capital projects, they get punished in the market, right? Unless it's unusual super projects. So that was part of the thinking.
I mean, with the Wheaton stream in place, you would technically probably be able to actually build it yourself if it comes to that.
Yeah. So the group has the capability. Obviously, we'd have to build up the team a bit more, and you'd have to go out and get some additional financing. So you'd probably go for, traditional bank financing for a certain portion of it. You'd have to go out for equity. But, say that through the feasibility study, you end up, with roughly the same $1 billion initial capital. You've got a quarter of that already committed to construction. So it makes, even though you have a stream on the project, which some people wouldn't like, the stream effective cost of capital is about 8%, right? So it's pretty attractive, particularly at this early phase of projects. So, with a 25% roughly of the construction costs committed, it makes it less of a burden for a mid-tier or even ourselves to go and, finance it.
Of course, your project is always for sale, but at what point in time or at what stage do you think it would make sense, or would be sort of, when do you expect to be able to sell it?
So basically, we back before the pandemic hit, Ross had talked about in sort of 2020 that he felt like the project was de-risked enough that it could be sold. But, pandemic sort of changed a lot of things, and that didn't happen. And we got to the point where we had to make a decision because in Ecuador, the way the concession systems work, we're in the first year of advanced exploration. So you get 4 years with the concession at advanced exploration. Then you get 2 years for economic assessment or economic review. And then that can be extended 2 years. So you had a time clock in the background that was ticking. So we decided that we needed to further de-risk the project. We raised some 20 million to go out and do the pre-feasibility study. And, a lot of that was Ross's line of credit. So we got that done. So we thought that, we need to get that done, further de-risk it, and then we could go back out and start talking to people. And we just finished that, but we've got inbound interest from some companies. And so we haven't started a process. Right now we're focused on getting, the feasibility study field work that needs to be done completed. And, that's sort of a 9-month to 12-month period to get all that done. So, along the way, we'll kind of see where we're at and decide, if we want to be active or passive with a potential deal.
You probably have already answered this question, but we always ask the final question. Where do you envision Lumina Gold in 5 years?
Well, in 5 years, I envision, whether it's us or somebody else, it'll be permitted and construction will be started.
falsas promesas que no valen nada. Hace mucho tiempo me estás engañando.